Bank rating, secret scoring tactics revealed. Most business owners don't realize that banks secretly score your business long before you ever apply for funding. The hidden score, your bank rating. Let's get into it. Let me share my screen. We're going to start. Okay. Ladies and gentlemen, my name is Noel A. Booker, Sr. with Business Credit Builder.us. Today we're talking about bank rating, secret scoring tactics revealed. Okay? Check out my contact information and the three buttons on the bottom. The green button is how you can get a free guide on how to build business credit. Just go to businesscreditbuilder.us/free guide. If you want to talk to us about the services that we provide, which is accounting and bookkeeping, websites and web hosting, and business credit and financing, you schedule a free business credit consultation at businesscreditbuilder.us/consult. And if you think you are qualified to get funding now, go to businesscreditbuilder.us/get funding. Okay. Business bank accounts. It is essential that a business owner separate their personal and business banking. This is critical in running a successful business. One of the major financial tools used to accomplish this is a business bank account. A business bank account helps maintain accurate records, prepare reports, make deposits, withdrawals, transfers, issue checks, and much more. So, that's all stuff you already know. Business bank accounts, whether a business owner decides to open an account at a national, regional, or local bank, credit union, or community bank, they should select a bank that can best cater to their needs of their business. While every bank offers various types of financial business products, each serving a specific need, one thing remains the same: bank credit. Okay? Bank credit. Bank credit is the total amount of borrowing capacity a business can obtain from the banking system. This is not the same as business credit, which is much broader category of lenders such as suppliers, credit card issuers, or leasing companies. Bank credit. A business can secure more business credit quickly as long as it has a minimum of one bank reference and an average daily account balance of at least $10,000 for the past 3 months. That's the crucial piece right there. $10,000 in as an average daily account balance. Okay? It can't go under that average daily account balance of $10,000 for the past 3 months. This yields a bank rating of low 5, meaning an ADB of $5,000 to $30,000. Okay? A lower rating, say a high 4 or a balance of $7,000 to $9,000, $999, won't put a stop to the business's application, but it will slow down the approval process. So basically, you want your bank rating to be a low 5, okay? Which means you need to have at least $10,000 in the bank for the last 3 months straight. Okay. If you got that, then they're trying to give you a loan. Okay. They're already trying to give you a loan if you got that. Okay. And where this comes into play is this. When you go to a bank and you put out an application for a loan, right? You get the application. Now, when you do the application, they're not figuring out whether or not you can qualify yet. Okay. But you have to pass everything that's on the application. Once you pass everything that's on the application, then they send your application to the underwriting department. Now, the underwriting department, they're looking at this average daily account balance of at least 10,000 for the past 3 months. Okay? If your bank rating is a low 5, you will qualify most of the time. Okay. This rating is the average minimum balance maintained in the bank account over a 3 month period. A 10,000 balance will rate as low as a low 5. $5,000 rates a mid 4. 999 rates as a high 3, and so on. The main goal should be to maintain a minimum low 5 bank rating for at least 3 months. Unfortunately, without a low 5 rating, most banks will assume the business has little ability to repay a loan or a line of credit. Okay, here goes the chart again. High 5, mid 5, low 5, low, high 4, mid 4, low 4s. Okay. You want to at least be at a low 5. Bank ratings. Business owners should do whatever they can to keep at least 10,000 in their account over a 90-day period. The money should be kept there just to ensure the bank rating is high enough to increase future financing approvals. Each cycle is based on the balance rating during the previous 3 month period. So before a business decides to apply for credit, it should keep a balance rating of a low 5 for the past 3 months. So in other words, when you go and fill out an application at a bank for a loan, make sure that the last 3 months had this average 10,000, right? Okay. It is also essential that the business owner ensures that their business bank accounts are reported exactly the way their business report records are, with the exact same physical address, no PO boxes, and the phone number that is listed with 411 National Directory. Okay? It is vitally important that every credit agency and trade credit vendor, every record keeper, financial records, income tax, web addresses, email addresses, directory assistants also list the business name and address the same exact way. No lender is going to stop to consider all the ways a business might be listed when they look into the business credit worthiness. So that's most important, is to have all your information consistent from the beginning. All right. And in my other videos, I talk about that all the time. And all the steps of building business credit. The most important step is the first step, which is how you got your business set up, and that all the information is correct, and it's not different information, right? If they can't find what they need easily, they will simply deny the application, and they don't have to tell you why they denied you. Okay. It is also essential that business manages its bank account responsibly. This means the business should avoid writing non-sufficient funds, checks. You know that already. That's a given, right? It's even a good idea for the business to add overdraft protection to their bank account as soon as possible to avoid NSFs. It is also very important that businesses show a positive cash flow. The cash coming in and going out of a company's bank account should reflect a positive free cash flow. Positive free cash flow is the amount of revenue left over after the company has paid all its expenses. When the account shows a positive cash flow, it indicates that the business is generating more revenue than is used to run the company, which makes you less of a risk. Okay? It is important to also recognize that the banks are motivated to lend to a business that has consistent deposits. A business owner must also make regular deposits to maintain a positive bank rating. It is vital that the business owner make a lot of consistent deposits, more than the withdrawals they are making, to have a good bank rating. Okay? Bank credit is not only based on monthly deposits, balance ratings, and check history, but also includes the age of the account, the bank products the businesses uses, right? They want you to see you have different other bank products than just the business account. They want to see that you got a car loan, or you got a mortgage, stuff like that. And any savings accounts and investments and stuff like that. They want to see that you have a diversified list of investments accounts, right? The age of the bank. A seasoned bank account shows stability and longevity in the eyes of lenders. Keeping a healthy and long-standing relationship with the bank is also crucial for all companies. Okay? Hey, Melissa, a good, stable relationship with the bank that reflects longevity will be highly appreciated by lenders considering lending that business money. Bank products being used. Your bank rating will be higher the more bank programs you use, maintain, and pay as agreed. Having investment and savings accounts help your bank ratings. Having open loans, even open CDs, help your bank ratings. Savings and investment accounts. Bank ratings are higher the more banking, investment, and savings accounts you have. Having higher balances on those accounts further help the bank ratings. Making regular deposits into these accounts also helps your bank ratings. Beyond just the bank rating, the business bank should also act as a trusted advisor that can assist in growing the business. It helps a business to consider working with a financial institution that specializes in providing banking services tailored to their specific industry. The more services the bank offers that the business can take advantage of, the higher the bank rating will be. Working with a lender that already understands their business makes it much easier to get a loan approved compared with other lenders. This is because the majority of lenders have difficulty assessing the credit risk of most small businesses or some any industries they know little about, right? So if you're sitting down with the bank manager and he knows you, he knows about your business, he knows about the financial moves you're making and stuff like that, it's going to be much better, right? Having a relationship, right, with the banking manager, right? Okay. And many banks have niches or industries they just work better with. While profit and loss statements, tax returns, business credit, and personal credit checks are common requirements in the lending process. It is much easier for a lender to underwrite a business financial risk when it truly understands and specializes in making loans to a company in an industry they are familiar and comfortable with. Building an exceptional bank rating. Having a good bank rating is essential with securing bank financing. Ensure you keep your bank balance average over 3 months as high as you can, preferably over 10,000. Ensure your account doesn't go negative and you incur NSF charges, as these will destroy your bank rating. Take advantage of and use other services your bank offers, such as CDs, savings accounts, and other investment accounts. Open your bank account when your corporation starts and leave it open, as this longevity will keep your bank rating. Make consistent deposits on a regular basis and ensure each month you have a good cash flow through your account by regularly putting into the account more money than you take out. Okay? Taking these steps will ensure you have an exceptional bank rating, and you will make sure you have fundability. Make sure your business maintains fundability. An exceptional bank rating means your business will have a great chance of being approved for bank financing, including loans, credit lines, and credit cards. Ladies and gentlemen, I thank you for joining us. If you missed this live, check it on YouTube, my YouTube channel. And when you do get to my YouTube channel, please subscribe, like, and put a comment in there for me, all right? It's gonna help my YouTube up, right? Y'all know how that go, right? Okay, ladies and gentlemen, thank y'all for coming. Make sure you get your free guide on how to build business credit at businesscreditbuilder.us. Schedule a free business credit consultation at businesscreditbuilder.us/consult. Have a good day. We out here. We out like shout.